Good afternoon, everybody, and welcome to today's Lunch and Learn webinar. We're about to unveil a game-changing strategy that could revolutionise your property investment journey. My name is Tim Graham of hotspotting.com.au, and I'm delighted to introduce my guests for today, my good friends, Chris and Zen Christophe of Reventon. How are you, boys?
Very well, Tim. Thank you very much for having us.
Thanks for having us, Tim.
Good to see you both. Background's looking all really good. You've got your studio at the office all looking really sharp.
Indeed.
Well, we can't take any credit for that, Tim.
We've had Reventon on podcasts and webinars in the past, and we're often talked about locations around Australia to invest. And today we're going to strip things back a little bit. And I guess what you were talking to me about during the week is that there isn't one location in Australia that everyone should be looking at. And I suppose what we're going to do today is strip it back to what the Reventon formula is, and it's really to understand people's goals and then start to select the right strategies for each individual. And I suppose the way that Reventon is quite unique in this investment landscape is that you have financial planning, mortgage broking, accounting, property management, property investment in both new and established properties, all under one roof, which means that you can really take a holistic approach to people's finances.
100%, Tim. And obviously, putting a strategy is very, very important in place, but making sure you're all pulling towards that one common goal. So that's why it's very important that we have each individual professionals in there to give you the right licensed advice.
Absolutely. Now, I understand you've got a bit of a presentation today that you're going to take us through, which is to talk about the Reventon formula itself, but also going to show us, some results of the formula as well.
It's all good to have a formula, Tim, and everyone talks about formulas. They've done this, they've done that, but a proven track record is what we're all about at Reventon. We talk about it. We love real estate. We've been in real estate for collectively, myself and Zen, for close to 50 years. So we've done a lot of deals, and we're constantly researching, evolving, looking at different areas around the country that are looking at emerging markets where people can capitalize on their growth, maximize their tax efficiencies, and really start to build that property portfolio.
Terrific. All right. Well, Zen's Mr. IT. You want to get things kicked off for us?
Certainly, Tim. Thanks for that. And Mr. IT, I'm not too sure about, but we're going to give it a go here, Tim.
So obviously, as we spoke about before, the Reventon formula, which we'll talk a bit about more in detail, our presentation obviously will depict certain parts of that and the 4 steps you do need to be able to identify the right strategy, the right team, to be able to purchase that property, but more importantly, duplicate a successful process. And as Tim mentioned, I think it's very, very important to be looking at property holistically all around Australia, not just in one particular area, whether that be a state or a local area or a regional city. We've sold in a lot of them that has to sit in a certain criteria and formula, which we're going to actually look at. So we're going to just share a video.
So, Chris, well, you're just touching on your book, and look, I know we have covered this in previous webinars, but you're an Amazon bestseller, best-selling author in a number of categories.
Yes.
Your book, Your Path to Wealth Brick by Brick, the Reventon formula is detailed in that book, isn't it?
Of course it is. Now, the one thing I like about this book is that I actually put my money where my mouth is. So in 2017, I decided to write this book because I wanted to give as much knowledge as possible to investors to get into the market and make smart investment decisions. I'm very proud that 100% of the money from this book goes to charity as well, which we'll talk a little bit about later. But while I was actually writing this book, I was actually buying in different areas all around Australia. Now, I was able to purchase 14 properties across 3 locations in a short period of time that had over a $2.1 million capital growth and a $430,000 worth of cash flow, $189,000 in positive cash flow. I was actually putting my money where my mouth is, and I invested quite a lot of money to show that this Reventon formula works, and it's what we've helped thousands and thousands of clients with as well.
Excellent. So, Chris, we'll just go through a little bit of an overview as well, just to give the viewers a bit of an understanding to what we'll be discussing today, and just some timeframes and things like that. We'll obviously have some Q&A towards the end of the session as well.
Of course.
But Chris, if you just want to talk us through a little bit about some of the points that we'll go through today.
So as I mentioned before, the presentation will be 45 to 60 minutes. This will include a short 5 to 10 minute Q&A. Please keep all your questions coming through. We'll answer as many of them as we possibly can. We do have a limited time, but we will endeavor to answer every question and email you back the answers. As we discussed before, I want to show you the Reventon formula, which I've written about in my Amazon best-selling book, which shows you exactly where to buy, how to buy, what strategy to put in place, what blueprint, and what determines a good investment location, a good investment property. Now, Tim, at the start of the presentation, you said location, 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 which everyone heard. I've coined a phrase called affordability, affordability, affordability. If you can afford to keep a property for the right amount of time, then you can successfully do it over and over again. It's like putting a stepping stone very close to your next one, so you can build that property portfolio. Now, Reventon formula, well and good. Let's look at some client success stories. We mentioned that we sell property nationwide. We're going to show you that this formula works across the country in emerging markets over the last decade. And the last point, we will invite everybody to make a free no obligation appointment with Zen and his team, that they can cover the strategy exactly how to buy, what to buy on your individual circumstances. So now we're just going to give you an overview, but obviously seeing how this can benefit you and your family is in that one-on-one strategy session with one of Zen's consultants.
Okay, just to touch on, obviously, again, Chris and Tim, for the viewers, just a little bit about myself, Chris, the organisation. As Chris was saying previously, combined 50 years industry experience, which is something obviously that we're very, very proud of, and something that's for us, I suppose, here at Reventon, for the organisation, for the people working within our organisation, it's something that has helped us with a lot of knowledge. We've been able to, as Chris was saying, look at products not just here in Victoria where we're based and our head office is, but look at properties nationally, and I think we've been able to do that in the past 20 years since we've both been running organisations in the industry as well, Chris. So collectively, I'm not sure that there's too many people that can speak about this, but to have sold over 5,000 properties nationally, again, as we were speaking about previously, it does talk about our longevity within the industry, but also our appetite to learn, develop, understand the difference between collating data, moving into different areas for different reasons, and we will be discussing that as we head through the presentation as well. But again, something that I know myself and Chris are both really proud of, the fact of our longevity within the organisation, but also the families and the clients that we've been able to impact over that time has been something that's been exceptional for us as well. So the fact Reventon's been featured in over 65 publications is fantastic, and received over 35 various industry awards, so innovation awards, better business awards. Chris, 6-time platinum winners. I believe we just got our 6-time platinum achievers award.
We did it twice, yep.
In finance as well. And I think it was only 24 hours ago we received another award, which I know you're pretty happy about, and maybe we'll share it with our friends, Tim as well.
Well, it was a great place. We're certified as a great place to work 2024. So at Reventon, we're all about our client's journey and our team journey, which is very important. And obviously, we've had an amazing journey in the last 19 years. In 2 weeks, we celebrate our 19 years in business. We were established in 2005. Tim worked alongside us for many years, and we're responsible for a lot of those accolades and awards. I don't know.
Apart from the best place to work,
I don't know if it's a coincidence. We just won the best place to work since Tim's left, but I don't know. But he did play an instrumental role in a lot of these awards and helping us get to that point. It's something that we're very proud of for our team and obviously our clients.
And I think in relation to innovation, things that we've done over the past 10 years, Tim has obviously played a huge role in that, helping us with our data research and things like that as well. And a lot of the client case studies that we will go through today is a lot of the work that Tim did with the team as well. So again, thanks to yourself, Tim, for all the
A
hard
lot
work
of
that you
hotspotting
put
data.
in. And things again with our affiliated partners, obviously with Hotspotting and the research, the thorough research data that's put together. And I know myself personally, I really enjoy spending time watching some of the videos that yourself, Terry, and the team are able to put together there at Hotspotting. It's always informative, and it, again, for us, understanding that getting real estate professionals to assess data rather than say your economists and people working in the banking organization, things like that. When you're talking about real estate professionals, obviously the guys at Hotspotting there have been fantastic for us as an organization, and I know they've been probably fantastic for a lot of their viewers and members and subscribers there as well. So thanks for all the support there. Just to move on, because as I said, we could probably talk all day about the people that have helped us be able to achieve what we've been able to achieve as an organisation, and some of our client success stories and things like that. But I do want to touch on this, Chris, and I know that the success of the organisation has been really important for you, but I also understand that you're very passionate about your business, very passionate about the work you do, very passionate about the staff members, and obviously receiving the Better Place to Work was something that you're really proud of as well. But the work that you do outside of the four walls here, with your fundraising activities, has been something, again, that has been exceptional. The fact that you started working with Vinnie's in 2018 and have been an ambassador there for over 5 years. Last year, you were their highest fundraiser in Victoria, and I think that your fundraising efforts last year were able to help feed over 1,600 families. And I know that the organisation and the clients that are working with us here in Reventon definitely helped us with those fundraising activities. And I know a Lead with Kindness event was a fantastic success. But again, being able to raise over just short of say $700,000 for Vinnie's, I know, as I said previously, is something that you're really proud of. But there is something else that you've got going at the moment.
Yep.
And if you wouldn't mind just touching base with some of the viewers and just letting them know again what we're doing with Vinnie's this year and how that's going to impact many people over the course of the next.
So obviously, real estate's what we do, and that's what we love, and that's our passion. That's what we do every day. But helping our communities equally as important. So, love working with Vinnie's and helping eradicate homelessness in this country. We've a few years ago, I had an idea to put our skills on show as well and purchase a block of land, build a home, sell it, auction it off, fully paid off, and donate it to the homeless. Now, we've actually managed to buy a home, buy a block of land, pay it off. We're going to auction off later this year, and we're hoping to raise over $1 million. So that's
This
going
is
to
using the Reventon formula too, Chris?
100%. It's using the Reventon formula, and I wanted to showcase our skills and ability. Now, when I was doing the research, and I was so happy to hear this, we've made hundreds of thousands on capital growth on this property in the last few years. There's no capital gains because it's for a charity. So not only do we make so much money, we actually get that capital gains exemption, so we're making even more money for our charity. So I can talk about Vinnie's and real estate all day. It's two of the things I'm most passionate about, alongside my family, obviously. So so the great things we're doing with Vinnie's and the Brick by Brick project. Stay tuned. We're probably auctioning that house off later this year, and I'll be doing my 7th Vinnie's CEO Sleep in June. I encourage all CEOs to participate, and anyone who can share the message and share awareness and also donate, please do so. We need as much help as we can get collectively.
And I think to talk about the impact of that fundraising, Chris, is probably the most important thing. So well done to you, well done to all of our clients, and well done to all our affiliates with the assistance that they've given us as well.
Now, obviously, the last point we talked about, the Reventon formula. Very proud to be an Amazon bestseller. I wrote this book now, and 100% of all the money that this book raised goes to charity as well. We're going to talk about the Reventon formula today, how to buy real estate, how to select the right team, how to implement the right strategy, and more importantly, how to grow, build, and protect your wealth for now and generations to come through making smart investment decisions. So on our next slide, I'm going to talk to you about the 4 steps which comprise of the Reventon formula.
So, just pause for a second. I don't think we're actually seeing your next slides. We're still sitting on the Reventon formula results and speak for themselves. So we might.
So we've got a slate if we grab George.
Yep.
Okay.
Ticks.
Well, we're waiting for the next slide. I will talk about it's a 4-step process, the Reventon formula, which is depicted. Now I'm going to talk as much as I can because I do have a limited time. You can also catch a copy of the book which has got this in more detail. But the 4 steps are, if we look at this first step, it's called the foundational blueprint. Now, what does that actually mean? It means identifying exactly how to find the right properties, what can you afford, what's the right risk tolerance, what sort of debt levels you have, and things along those lines. So the first part, which is what we're going to make an offer to come and speak to one of our teams, is to get the right strategy in place, the blueprint. And a lot of people don't understand exactly what they can borrow, how they can borrow. And a lot of people buy real estate the exact opposite way to I feel that they should. And what I mean by that is people walk in, what can I borrow to the bank? 800,000. Then they'll walk into a local agent. Now, a local agent's only going to show you local real estate. And then they're going to say, I'll buy that and I'll over leverage. What we do at Reventon is we exactly reverse that formula. What can I safely borrow? Where's an area that can offer high capital growth, not in a local area, but Australia-wide? Because we've got to look at emerging markets where you can make money, where you can have high tax efficiencies. Then we look at not over leveraging, because by laying the bricks, which is step 2 of this process, we can buy a property. Now we stick to a sweet spot, which we'll talk about in the next slide. That $450,000 to $700,000 in real estate is where we want to stick to, because it's easy to predict. It's got a high rental yield, maximum tax efficiencies, and we can look for different emerging markets. Now, as Tim mentioned at the start, we look at properties nationwide because we want to look at certain trends. Now, stage 3, which is securing finance for your investment. After we've got the foundation of blueprint and we know what we can buy, what we can afford, what's our risk tolerance, then we look at who's an expert team that we need. And we need to speak to a good mortgage broker, a good real estate agent. We need to have a good accountant in place so they can maximize our tax efficiencies, making sure we filled out tax variation form, just to mention a few. Look at a good property manager. You want to have a good property manager, look after that asset, make sure you're getting your regular rent reviews, making sure you have the right safety nets in place. And obviously financial planning, making sure you have the right insurances. When it comes to investing, not everything goes to plan all the time. You got to remember, you're dealing with tenants, you're dealing with banks, you're dealing with solicitors. There's so many moving parts. So going to speak to an expert team that has the answer, has the team, and more importantly, has the expertise on how they can put those things together is paramount to a good, successful investment strategy.
And I think just to touch base on that as well, Chris, having a great team of professionals and a number of different services is something that you've been able to put together here at Reventon over the past 2 decades.
Yep.
And that's something that I suppose understanding where one thing would lead into another is really important for the clients. And you spoke about that first investment and sort of getting that right. Getting the right information from the right professionals is going to help you make the right decision more times.
100%, but also too, you got to remember, not over leveraging is so important. Not borrowing more money than you can afford, because you don't want to impact your lifestyle too much where you need to make sure the property's rented 52 weeks of the year. You need to make sure the interest rates stay the same. All these things are very, very important that you put the right safety nets in place. So when we look at our strategies, we make sure we're allowing for an 8% vacancy rate. There's a $30,000 buffer, sometimes more if possible. We're not over leveraging, because that's very, very important, because as your strategy goes, people buy property and they just hope it grows and they build equity. What we want to do is make sure that we can use that cash flow to pay off all of our bad debt, like our own home, and we're building equity while it's going up, but also while we're reducing our bad debt twice as fast. So while we're building equity and our loan to value ratio, so our debt versus our assets, is at a safe amount, that leads into our 4th point, applying the mortar to brick by brick, which means successfully duplicating this process, buying a 2nd, 3rd, 4th, and 5th property. Not a lot of people own multiple properties, as you know, Tim, and we've been very successful in helping our clients build property portfolios. nationwide.
Speak to investors all the time that have maybe worked with a buyer's agent or worked with an investment group in the past. And one of the challenges I see is that this industry seems to be a little bit transactional. So they wham, bam, thank you, man. I got your business once and they never get it again. I think one thing that Reventon's been priding itself on for many years is the fact that you are in, regular 6-monthly checkup reviews, not only looking at your properties and whether you can go again, but also making sure we're paying down debt, you are getting the right tax deductions, and we're actually on track to fulfilling those goals and plans that you first identified in your blueprint.
100%, because for us, it's not transactional, it's transformational. We want to build long-term, meaningful relationships with our clients. And we've got on the bottom here, invest where we invest. Now, there's a lot of things that we do at Reventon that we're super proud of. But for me, if I'm an investor coming in there, I would like to know, have you done your research and do you know the markets inside out? Have you got a proven track record? Now, we've got the Reventon formula before we look at any real estate. Now, Zen mentioned at the start, we look at independent research companies. Now, we work alongside yourself at Hotspotting. We want to also test our theories with independent research. But the third check and balance, which we do at Reventon, which in my opinion, makes us stand out even further, and is the most important check and balance, we invest where we tell our clients to invest. So for me, if you want the stamp of approval, are you taking your own advice? Are you buying where you're selling? Is your family in that area? Is your team in that area that you're referring your clients to go into? And every area that we're going to show you with our client success stories, all of us own in these particular areas.
No, I can attest to that. I can tell you majority of my portfolio is in areas where I bought at the same time as Reventon clients. So,
and I think that's a very important test, Tim, because you've actually seen us over the course of the years that yes, we're very stringent with the property that we select over the course of the last 19 years. We were established in 2005. We use great companies like Hotspotting to give us that research because we want to check that in further, but also we put our money where our mouth is. And I know Zen specifically and his team, because Zen runs all the property acquisitions, is on the ground all the time, speaking to developers, speaking to builders, and making sure that the property is great quality. He knows who we're dealing with, and I think we're off next week.
Yeah, next week we're off on our second trip for 2024. So again, when I joined the organisation only a couple of years ago now, we've been out on the ground at the majority of all the places that we've been able to sell to. Not only myself, as Chris was saying, speaking to land developers, speaking to builders, also speaking to local councils as well, speaking to local retailers in the area, and understanding not only what sort of government infrastructure is being put in, what private infrastructure is being put in as well, and actually being on the ground and seeing that development, I think is something that allows then our consultants to speak with a lot of confidence, not just based on the research that we've been able to do, but actually getting out there on the ground and understanding that there are certain pockets in certain areas. So there's, and again, certain streets in certain estates that you do want to purchase in, and being out on the ground definitely does help us with that as well.
On the ground, being able to walk around and getting a proper gut feel for it.
And you want to physically see the product as well. I know it's an investment, and we were very, very big on making logical decisions with emotion. Don't use your heart, use your head. But still, we want to do our due diligence to make sure we're thorough. And a statistic,
especially when you're investing in states where you may not have too much knowledge about, where you're just relying on some external data that has been presented to you, actually getting out on the ground there and taking consultants out on the ground. I know for myself personally, once we started selling nationally, getting out on the ground and taking our consultants out there was something that was just really important for us as an organisation.
Well, it's eye-opening, but it also gives you confidence as well. And I guess if you're not growing or evolving, I think you're doing yourself, your company, and your clients a disservice. So we're very, very big on making sure that our knowledge is at the forefront of what we do. And a statistic that we've got here at the bottom, the national average, according to CoreLogic, was 5.5% as a capital average. At Reventon, we're able to 3x that, and it's 16% capital growth in 2023.
And for those who didn't follow that on the last slide, Chris was showing, or Chris and Zen was showing, there was 5.5% dwelling average for capital growth in Australia according to CoreLogic last year, and Reventon customers averaged 16%, which is almost 3 times the capital growth. So we've done incredibly well there.
Well, look, that comes down to obviously research and making sure that we're making the right decisions. And part of the Reventon formula, as I said, I can talk about this all day. I'm going to talk to you about a very, very important part of the Reventon formula and why we stick to that $450,000 to $700,000 mark, and why we think it's the sweet spot of. It's easy to find tenants. It's the most. It's got the lowest vacancy rates. It's got the highest rental yields. So what happens traditionally with real estate, as the price tends to go up, so we're talking 7, 8, 900,000 or $1 million, the rental percentage goes down. So the yield, so the rent. So instead of if you're looking at a 5% return on 500, you'll be looking at say $490 a week. If you go to $1 million, the rent might be 700, which is about a 3% return. So that's why we stick within that sweet spot. We get very, very good cash flow. We get great capital growth because we're looking at emerging markets, which is how we're able to get that 16%. And we have very, very high tax savings because in most cases, our investors are buying new builds. Now, we do buyer's advocacy and things like that as well, but our core part of our business is identifying new house and land packages nationwide that are sitting between that $450,000 to $700,000 mark.
So, and again, Chris, just to touch on that, obviously some of the things that are really important in the areas to where we look to invest, economic growth and strength, really important for us. Diverse employment, so we talk about different employment coming into an area.
So it's not just mining or something, it's got different diversities.
Yep. And affordability, obviously, very important in relation to finding that properties in that sort of $450,000 to $650,000, $700,000 mark. Again, a number of different factors that help with property growth, tourism, obviously population growth. I know this year population growth has been at an all-time record, and I believe again over the course of next year we will have a large amount of immigration coming into the country as well.
Shortage in houses as well, which means we've got a supply chain issue. House putting pressure on the prices, which means the prices will go up.
Yep. Some states are falling behind by about 25,000 dwellings per annum. So that again is putting pressure on the rental market. It's putting pressure on housing demands. Plenty of people are actually migrating here to Australia, and the fact that we're unable to supply the housing shortage is just getting worse and worse as the years are going on. And as far as most real estate professionals have been able to predict, we don't see that changing in the near future as well. So again, some of the things to look for, obviously throughout our presentation as well, and why we select areas at different, I suppose, times at the property clock is really important for our clients to understand this.
Just to discuss, obviously we're not going to show the property clock, but 9 o'clock basically indicates 9 o'clock is an emerging market. They're forward indicators that we're looking for that's going to determine growth. So a lot of people that sell real estate, they're in markets that are booming. We feel you're a bit too late. What are the forward indicators before they're booming? And a couple examples, obviously, we're selling in Geelong since 2014. We're shortly after in areas like Ballarat, Southeast Queensland, Adelaide, Perth, and Zen's going to show a few of these examples as well, because when it hits that Reventon sweet spot within that 4 to 700, we're looking for all these indicators. So we're looking for patterns to why something's going to grow. And going back to picking the right property and the right strategy, which is step one, the foundational blueprint, which is where you make an appointment to see exactly where all this comes together, is so important. And as I say to all of our investors, all the people that read my book or people that ask me about real estate, the first thing we need to do is understand the market, understand your risk tolerance, and really dive deep before you look at what I should buy, where I should buy, and what my affordability actually is.
And I think just to touch on that, Chris, people's goals and objectives change over a period of time. So the fact that you can sit down with them, whether it's a 6-month review, whether it's an annual review, and assess where things are going. Life throws a number of different curveballs at people. So constantly having a bit of a check to see how things are tracking for you, how things are tracking for your family, what are you looking to achieve next.
Changing careers, having a child, all these things play factors. Your goals might change. You might want to retire soon, you might want to retire later. But the one thing that we always say to our clients, two things that will definitely not change is you're going to want to minimize your tax and you want to build your wealth for your retirement. So let's put a robust strategy in place. And with our 6-month reviews, we can be nimble and change the direction of that. And by buying, another good point, by buying smaller pieces of real estate, 450 to 700,000, you can buy 3-4 pieces of real estate. If you're looking at 500,000 as an average, you can buy 3 areas across the country instead of buying one property at 1.5 million. Now, 1.5 million, that property might rent for 1,000 a week. What if you bought 3 properties renting at 500 a week? You're now getting 1,500 a week return as opposed to 1,000 in different areas of emerging markets, which means they're smaller investments. You've got different options. And that's why the Reventon formula is so important, because it's an easy way to predict how to duplicate a process. And we've seen many clients in the past come to us that have done this by themselves, borrowed too much money, got the wrong advice, gone in the wrong areas, done emotional purchases, and has really cost themselves money or opportunity to be able to retire with a better understanding. Which is why we always say it is so important to speak to a company with a proven track record that has runs on the board, and do they live and breathe what they say. Zen mentioned it before, super proud to be able to be in this industry for 50 years, still be as passionate as we were day one, still learning every single day, building our knowledge base, and to be able to assist over 5,000 clients purchase investment properties. Yeah, we can't wait to get to 10,000.
And I think, Chris, looking at it now and sort of looking at the presentation, talking about the property pyramid, I remember first starting in the industry, the median house price was obviously significantly different to how it is today. You could purchase a house for around about $250,000 and up to $400,000 was that sort of sweet spot now. And as we see 20 years down the track, that sweet spot again starting to change. But I remember first starting in the industry and having people coming through my organization, and I always had publications up on the wall talking about future forecasts and things like that. And people were walking in. I remember it was in the early 2000s. I know we were transacting business for around about $240,000 to $280,000. And I remember around about sort of the 2008, 2010 mark, people talking about by 2020 the median house in Australia is going to be around about $1 million, and people walking into our offices, having a look at some of the literature on our walls and saying, "Oh, the median house price is $400,000 at the moment, or $450,000. How do you foresee it getting to $1 million by the year 2021?" And again, no one has a crystal ball to give you an understanding of exactly what that property is going to be worth in the course of the next 5, 10 or 15 years. But what we do have is we have history. And history generally has a pattern of repeating itself. And obviously supply and demand is a huge thing. And when supply is so low and demand is so high for housing at the moment, then most of those indicators will point to...
It's pressure on the market, but also, again, going back to that affordability piece, people used to say to me, and I used to make this bold statement, our methodology is recession-proof. And they go, "Chris, how can you say that?" I go, because in absolutely any market, people need to live in these sort of properties. There's always going to be a market for people who are investing. There's always going to be a shortfall in retirement if we don't invest or take action. And people are always going to have a tax disposition. So when I look at them and I go, our methodology is recession-proof at any market, I test this. And 2017, as I said, I documented the process. So when you hear me speak in certain seminars, I actually show the real estate that I bought, how I bought using the Reventon formula. Tim, you've seen it yourself, and it definitely works. So as I mentioned, we want to try to stick to our 45 minutes. We'd like to show you a couple case studies and how the Reventon formula actually works. This specific client of ours was a single female client, was working as a nurse, who now owns over 5 investment properties. That's in the top 1% of investment property owners. Total uplift of $678,000 in 8 years. That is massive. And very, very important, when the client came to us, their biggest goal was to be debt free on their own mortgage. Well, guess what? She's debt free on her own mortgage. So what a great feat. Now I know that there's a couple examples here. So Zen, you've helped over close to 2,000 clients yourself as well. This is an example of one of your clients who was a brother and sister combination. Tell us about it.
So brother and sister combination came to me around about 2008, hoping to get into the property market. At that stage, owned their own business, so were self-employed. So we sat down. Initial strategy session was what's the plans sort of moving forward, knowing that they'd been in their business for just a short period of time, so it was just clocked over a year. So setting up a bit of a plan to say, okay, well, over the course of the next 12 months, this is what the business would need to look like in order for us to be able to start with your investment journey going forward. So put a bit of a plan to place to work towards, which we did do, and started their investment journey early 2010. They invested collectively over that period of time, and collectively been able to purchase 5 properties, which was a great success story that they were able to sort of work out a plan to pulling their resources together and help themselves obviously build wealth towards retirement. Those properties now have a total uplift of approximately $1 million, which is fantastic. But again, something that was really important for them was minimising their personal tax liability as well. So to be able to get a total tax saving of over $450,000 was something that was significant for our clients.
Now, when you said to me this example, when the client first came to you, they said they had a big tax disposition. Like when with the case study that I had, when the client came to me, she said she wanted to be debt free in her own home. But to achieve $450,000 of tax savings, and that's important, or to pay off their own home, comes down to that first strategy session and having a good plan. So here's some more examples of some clients over the decade. Yep.
Okay, so and again, Tim, you would have obviously been quite involved in some of these selections here when it comes to the new builds that we're going to be discussing. So just talking a little bit about some of the uplift that we've had over the past decade with some of our new builds, and also having a look at what different regions we were able to move into, not just across Victoria, but also across the country as well. So we will discuss just a few things there. I remember in 2015, looking at some of our case studies, we were looking at the officer area, so out of Melbourne area, about 50 minutes out of Melbourne's CBD. We were purchasing, and these are again 4-bedroom homes. We were purchasing them for around about $365,000. Bringing in a rental yield again, so the rental yield was quite high at that stage, so $480 per week. Again, the same sort of formula, looking for good growth, but also great a rental yield. So the holding costs were quite light. So that was at 6.8% of the purchase price. Current value of that dwelling as of September in 2023 was valued at $640,000. So there was an uplift of $275,000 over that 8-year period as well. And again,
please, and just for clarity, the rental yield you're putting there is today's rental yield, not from when the purchase was. Right?
Yes, that's correct. Yes.
Yep. And again, as we were saying, moving into some different regions, and I know Chris spoke about us moving into some regional areas, so around about 40 minutes to an hour out of Melbourne CBD. We had a lot of involvement in the Armstrong Creek area, which is just out of an outer suburb of Geelong, and also Sebastopol, an outer suburb of Ballarat. So major regional areas that we started looking into again in October
2014. That's also where our brick by brick home is. It's actually in Mount Denid, which is in Geelong. So the house that we're auctioning off for charities in those areas, as Tim mentioned, we put our money where our mouth is, and we're really helping the community by putting good advice around that. Now, the reason that's going to get a little bit more than this, it's going to be a slightly bigger home, so we can attract a different buyer as well.
Okay, so back in 2015, again, Chris, late 2015, we were purchasing properties in those areas from between $330,000 to up to $422,000 between those two areas. Yields were quite high, so between 6 to 7% yields across both those estates, and uplift again from $160,000 to almost $250,000 in uplift as well. So we did notice towards the end of 2017, sort of moving into 2018, 2019, land prices were starting to increase in Victoria. So again, we did start looking at areas outside of Victoria. We headed into some areas in regional Queensland and also areas neighbouring Brisbane's CBD as well. So in 2020, we were looking at areas such as Toowoomba, purchasing properties there at around about the $500,000 mark, with yields now achieving of $650 per week. Again, over a 6% return, almost a 7% return on those. Current values of those properties now, $650,000. So as of February 2024, about $145,000 in uplift from that property as well. So again, great success story for our clients.
We did mention whether we sell nationally. So the next slide, we're going to depict different states as well, which we're applying the same methodology, the same formula.
Yep. And again, I know, Tim, you were really keen on this area. We've had a number of discussions about the Sunshine Coast as well. So Tim, maybe you can tell us a little bit about why you were so excited about areas like the Sunshine Coast around about 2019 to 2020.
Yeah, well, I mean, the Sunshine Coast was a remarkable story I suppose, in the Australian real estate market for a number of years, but it probably overshot the mark just after COVID, like a lot of, the Queensland market did. But back in 2020, when we first started looking at that location, it was due to the decommissioning of a golf course on the Maroochydore River. It's like a 53-hectare site that they decommissioned and started building a brand new city from the ground up in Maroochydore. So that's well and truly on the way now. But due to the new city, we were creating an abundance of jobs. So a lot of people moving there for high-paying jobs. You've got companies like UE that were sending up their national headquarters there, the fastest internet cable in Australia connected to that city. I could go on and on, but the things like the airport going international overnight, a lot of those things had a huge impact on property prices. And I remember some of the properties that we sold there for under 500,000 were running at $650 a week by the time we constructed them. So remarkable results. But as I say, the Sunny Coast is probably not going to fit into your methodology now because it's jumped up so much in price.
Yeah.
Now it's not
current value for those properties now, Tim's almost $800,000. So significantly higher. Great win for the clients that had the foresight and decided that they would actually purchase in the Sunshine Coast. But yeah, as you said, great example of some good short and mid-term uplift as well.
And sometimes clients come to us and they want a specific area. Now they might not have these growth fears, but we can still help them get into those areas through buyers advocacy. People go, can I still invest in Victoria? The answer is yes. We're not going to say that it's going to have the same growth as some other opportunities, but if that's what the client really wants for a specific reason, we can actually facilitate that as well. But yeah.
And again, being conscious with time, Chris, I will go through some of the other builds as well. We did move into, and I remember when I first started with the organisation, first trip Tim and I went to was into South Australia. That was a great day, a great couple of days that we spent over in South Australia. I learned a lot about some of the northern suburbs in South Australia as well that have seen some fantastic growth. A very consistent market, I believe, South Australia and Adelaide, and we've had some really good success there in only, again, a short period of time. So talking about 16% growth over a 1 year period and almost 7% yields on some of those purchases is a great success story for us as well. So on that, Tim, I know you were definitely setting the pace and the agenda for areas that we were looking at. I was doing a bit of research before I started with Reventon as well, and really wanted to move into the Western Australian market, and we did do that. And over the past probably 18 months now to over 2 years, we did obviously some research before we headed into the West Australian market, which has now changed in relation to its diversification of employment and the demographics, obviously, of different employment areas and migration moving into Western Australia. We've seen some fantastic results in the Western Australian market, and we still believe that there are some great opportunities in that Western Australian market. But knowing, I suppose, those areas to sort of move into was really important. So just to give you an example of someone that we assisted in Western Australia, this was a larger purchase, as hence why the purchase price was in the mid fives, but was a larger home, so about a 26 square home, or traditionally maybe it's a 22 square home that we were looking at. But this client wanted to put a little bit more money into it, bought a larger parcel of land, so paid about $560,000 for that. Current value of that property at the moment is just short of $700,000. So uplift of over $130,000 in 6 months. That was obviously significant for that client, and who's obviously.
I do want to share one point. Although Perth was not a market at certain times, markets change and they're very cyclical. So the Reventon formula, while it wasn't years ago and it was all dependent on mining, now, as Zen says, become a diverse economy. That's why we study the areas nationally, because we want to identify where those opportunities are. And we're not going to stay on one area because we're going to move around Australia. So this is some of the buyers advocacy deals in the last 12 months.
More recently, we had to start looking at some locations across the country where we could actually find some established homes for people's borrowing capacities that were hindered. In the past 12 months, we had significant rate rises that did impair a lot of people's capacity to be able to borrow. So people had a real thirst to speed to market. So we've been looking at buyers advocacy now for, I think this is going
or an appetite for a completed product as well. Yeah. So some people said, I want a property now, I don't want to wait 6 to 12 months. Yep. So there's a number of reasons. Yep.
So some of the examples of some of the buyers advocacy deals that we've been able to do over the course of the last 12 months, and we've been able to see some significant uplift. So again, back into sort of that Western Australian market, we're able to purchase homes in specific areas for those low $400,000 marks. 8 months later, having those properties valued, we've been able to see over 13% growth in a period less than a year in those areas as well. We have also purchased in Victoria, again, Queensland, some existing homes in Queensland, Western Australia, so South Australia also. So all of those markets that we were talking about across the country, we've been able to successfully replicate the formula, not only for new builds, but also for some of our existing dwellings as well. So in 4 months to see 15% uplift in a place like South Australia.
It means you bought very well, doesn't it? I mean,
yeah, and there's a number of factors, yeah. Because obviously we're going to go in and negotiate the best terms for you, but if you even look at the property in Western Australia, you're looking at a 7.9% rental yield. So you're looking at $620 a week. So if you look at all these things, we're looking at strong rental yields, good growth, and these are affordable properties. And going back to what we said, by employing this strategy, we can buy second, third, fourth, and fifth property and really diversify our portfolio and maximize our opportunities. So now, our next clip, we've got a little bit about what our clients are saying, and then obviously we're going to be mindful of our time, and I'd like to invite everyone to our end of our presentation. So Zen, if you've just put on this clip.
Everybody's friendly, professional, and it's like a second home for me.
They made life so much easier for us where we didn't have to worry about anything.
We don't know the property market as well. I'd rather, do it right with the help of Reventon than doing a poor job.
The most important aspect for me is to be able to have someone that I trust. That was the reason I invested in Reventon.
They've helped all the way through and they've been open. They're not trying to push everything on us.
It gives me a lot of happiness, to be honest. It makes me feel like I've got more control over what I'm doing.
I would definitely recommend Reventon to anyone that I come across. This is a very professional company that will help you to grow your wealth and to plan for your future.
Also having the peace of mind that Reventon does everything for me.
It's nice to see them and know that they're actually buying properties as well. So it's not just them trying to push properties onto us.
I'm really excited. I'm very happy to see it. I wouldn't hesitate moving in here myself.
The experience has been nothing but positive, and the good thing is that when I say that I need to be contacted or follow up, they always do that, which is important for me.
From start to finish, it was a set process. If you had a question, if the person you spoke to didn't know it, they'll get the answer for you.
It's not just a sale and then they forget about me. The after sale service has been wonderful. They always keep me updated. That's great.
I'm very grateful for everything that Reventon has done for me, and I think I certainly can say a lot of good things about it because the experience is exceptional.
And it's a no-brainer for me.
I don't do this sort of stuff often, preach about other businesses and that. This is something that I thought I need to get out and say, this is a good formula, this works. If you can do it, get out there, give Reventon a call, get them to help you like they've helped us.
Very good. Well, we've got quite a lot of questions to get through. So thank you very much for that, boys. Really appreciate you taking the time to put that together and run us through it all. We'll start off. We've got a question here from Glenn. He says, is there a method that you prefer to sell without using a real estate salesperson that drives you nuts? So I suppose the question must be, do you look to sell off market potentially?
You could look to sell off market, but I'm going to use the same advice I use for everyone. Go to someone that does this all day long. Their advice is so important because where you're going to save a little bit of money in the fee, and I write about the do-it-yourself person as well, make sure you go to the right person because although they charge you a fee, they might negotiate a much better term than you. They might get you a much better price as well. So can you do it without using an agent? Sure you can. You can do this whole thing without using an agent. You're going to have to find your own broker, go to your own real estate agent, find your own property manager. But do they understand the strategy that you want to implement for you and your family? And are they going to pull in the same direction? And will you do the same job? Now, even at Reventon, we're all licensed experts, but we still use a team of people to employ a strategy.
Look, I can certainly understand why a lot of vendors might be nervous of having conversations with a million agents, and I can attest to saying it can be a painful experience. But there's a lot of services out there now that you can enlist. I'm not sure how much people know about vendors advocates, but there's vendors advocates out there now that you sort of go and you explain to them what you're looking to achieve for your property, and they'll go out and interview all of the agents and come back with a recommendation for you. Now, typically, I've seen a lot of these vendors agents are actually able to provide that service without a fee to you because they'll get paid a service fee from the agents themselves. Now, that's if you don't have the time, the knowledge, or the know-how, that's one way that you could do it. And obviously, you've got to do your own research in the vendor's agent too. But the second thing I would say is for people that are looking at working with a buyer's agent, don't always demand something off market. I don't know what happened over the last couple of years, but many customers I speak to have got this thing that they need to get an off-market property. I can tell you, good real estate is on market. There's a reason that people go off market with a lot of listings, other than maybe them not wanting to the rest of the street to know they're selling their home. There's a reason that they don't want to sell, and don't want to list it online. It's because they don't want the marketing fees. Again, they don't want to deal with a million different agents and go through the whole process. But they're trying to cut costs. And typically, what I'm finding in a hot market, good real estate should be on realestate.com and Domain because if you're a vendor wanting the best price for your
it's going to attract the higher market.
You need as many eyes on it as possible. So on the subject of off markets and things like that, just be wary that you shouldn't be judging your agents on the listings that they can get off market. It should be, have they been able to find you any real estate at a good price that ticks the boxes for you? That's all it should be.
I think value proposition as well, Tim. So understanding that if you were to spend a little bit of money on your property before you put it to the market, what value will that, say for example, you've put $10,000 into a property before you've taken it to the market. If that increases the purchase price by $20,000, $30,000, $40,000, isn't that an exercise that is worthwhile, and isn't it something that you should consider?
So Zen's basically talking about if you're going to do the property up a bit or maybe even stage the property, put some furniture before you sell it, take professional photos and things like that. So yeah.
And let as many eyes on the property as possible. Again, most people that have been dealing with property for many, many years understand that a property is worth what someone is willing to pay for it. So the more eyes that we can put on the property, you would think that would result in a greater price. Especially in a market like we have here in Australia.
So Tim, we'll take 3 more questions, then we'll get to as many as we can. We've got 5 more minutes. We'll take 3 more questions.
Christina has asked if any of these properties are NDIS tenanted. My understanding is that you're not dealing in the NDIS space at the moment.
That's a quick answer. No, they're not.
Any particular reason why you're not doing the NDIS?
Yes.
Vacancy. The vacancy of NDIS, the vacancies of NDIS properties is something that personally we're not 100% confident of having that property fully tenanted over a significant period of time, and some of the restrictions again may be something that someone doesn't want to deal with in a 3 or 4 year period. And again, we spoke about people's circumstances changing over a period of time. So not knowing what the variables are of those circumstances changing is probably the reason to why we haven't delved into doing something like that.
And in short, I wouldn't personally invest in it, so I'm not going to sell it to my clients. I know people and friends and associates who do sell NDIS. I've spent a lot of time researching NDIS. Government, we used to look at NRAS, National Rental Affordability Scheme. I know this is not NRAS, but it's also government backed. So there's so many more intricacies. You've got to spend extra money on that piece of real estate to make the bathrooms a bit bigger, add certain things. So you need that money back. Is it going to be rented 100% of the time? So they're doing the modelling based on 3 to 4 tenants. What if you can't get the tenants? What if it's not rented 100% of the times? When you're selling the property, which costs more to buy, to build, because you need to make certain allowances, your market changes when you sell. You need to make that money back. Although it looks very, very appealing from a rental perspective and it's higher, there's so many other intricacies that I don't know or don't feel comfortable with. So I personally wouldn't invest in it. Even though I've got friends that sell it and have similar businesses that do NDIS, I wouldn't sell it because I wouldn't buy it. But I have spent a lot of time researching it and understand a lot of the intricacies involved with that as well.
Okay, we've actually got a customer who says they're actually buying a property with you at the moment. Do I get the $500 voucher? I'll let them reach out to you directly and ask them.
You know what? At Reventon, you always ask the question. So please send an email, and the answer is yes, you will get a copy of the $500 voucher. Thanks for asking, and a signed copy of my book for asking a great question. Yes, you will, of course.
Christina has asked, how much do I need in funds to get started? So obviously the strategy session at the moment you're giving away is free.
That's correct. So
and then in relation to getting into the market, it really depend on their circumstances. There's a lot of different.
Book a free appointment, obviously, because it varies on people's differences. So usually traditionally we like people for 20% plus setup so they don't pay LMI. But depending on people's ages, their risk tolerance, their net disposable income, I can go on about this all day. By asking a series of questions, we need to delve more deeper to answer that question. Typically, you need a deposit plus setup, or in some cases, people have equity which we can use. So it's really the first meeting will uncover all those questions, but give you specific answers to what you're seeking. Great question, Christine.
Guarantor loans, there's a number of different things. So again, an opportunity to sit down and sort of work out a bit of a plan is best steps forward.
The uplift that you're showing does not translate in cash in pocket after capital gains tax in particular. Is the model focused more on using equity for the next purchase? So you're not selling down to recoup that valuation. So I think the question is in relation to the modeling you just showed of how much they've increased. It's not cash in pocket after sale.
No, again, Tim, as we said, different strategies for different people, and again, super important to discuss those. And as we said before, plans can change for individuals. Some people may be building a property portfolio to then be able to sell down some of those properties, maybe purchase their primary place of residence with some of those funds. Some people may just be rent investors where they're looking to rent in an area.
Transition to retirement.
Yep. So there's a number of different things there in relation to capital gains, depending on what returns you're going to be getting, the time that you've sold it, the income that you've generated in that year. There's a whole lot of different things there, but again, different strategies for different.
You touched on something very important when you sell it, because obviously one of our arms is an accounting arm. So there's capital gains exemptions if you have the property for more than 12 months, but also selling it and understanding when to sell that property when your income's lower, you might not be working as much. But the answer to your question, we do borrow funds to build a property portfolio, but there's different strategies for different people. If they're transitioning to retirement, if they're winding down, if they're building a portfolio, Again, go to someone who has a long tenure, who can look at your 6 to 12 month reviews to help you get into the market. Like there's a strategy to get into the market, there's also an extra strategy which can be done effectively.
That's a great thing about working with an organisation like Reventon. We're able to offer all those services as well.
Quite a number of questions, which I will get to the copies of these questions and their contact details too, so you can follow up with everybody. Thank you everybody for joining us today. Really appreciate everyone's feedback. As I say, there's a lot of questions in there, which means that people must have enjoyed your content. Chris and Zen, thank you very much for having me, and again, congratulations on the best, winning an award for one of the best places to work in the industry, and I think it's well and truly deserved.
Thank you very
Thanks,
much,
Tim.
Tim. On behalf of me and Zen, thank you for everyone for joining this presentation. We hope you've enjoyed it. We'll look forward to having a chat to everyone. Thank you.
I look forward to having a one-on-one conversation with any prospective clients or anyone that's looking to just build some knowledge in relation to the property industry. So thanks a lot to all of our viewers, and Tim, thanks a lot for hosting today. Really appreciate it.
Have a great day.